And right now we have our man, Mr. Chris Gaffney. Chris, folks, is the president of EverBank World Markets. You've heard him many times on TFNN. And as you're either driving in your car, don't go over to the web right now. But guess what? The program is archived. You can get it 24 hours a day. When you get home, go to TFNN, hit the EverBank banner. That's one way of doing it. Another way you can do it is you go to everbank.com/TFNN. And what's going to be brought up is that you're going to see EverBank personal page. Inside of that, you're going to see banking, lending, investing. Well, you hit that investing tab, folks, and what it's going to bring up, it's going to bring up a lot of different diversity inside the investment empire. We're going to talk market-safe CDs right now with our man, Chris Gaffney. Chris, how you doing today?
Doing great, Tom. Thanks for having me on.
It's great to have you on again. You know, when I was looking at this, well, first off, you know, the market-safe CDs, I know this is a second round, which is, and it's going to, I guess, be the final round, right?
Right. The first one was very well subscribed. In fact, we had such demand that we decided to offer another issue of that same, what we call series, market-safe series. It's Future Economies CD. So,
yes.
Yeah, the first one had a funding deadline of about a week and a half ago, and we went ahead and issued that CD already. So your listeners can now get into what this will be the final issue of the Market Safe Future Economy CD.
And you know what's so cool? And what happens, folks, is this, is that you have a structure of a CD. It's only $1,500 to open up. It's FDIC insured, and it's IRA eligible. The thing that is so intriguing, you know, to me, even when you were on before, and that's why I think that you had such a demand for them, is that, you know, the dollar had been on a streak going higher for almost a year and a half. I mean, you know, and listen, yeah, it can go up for 4 years. We know that, but it's very unusual for any currency. You know, currencies like trending, you know, and this trend had started a long time ago. So I can see.
That is so true, Tom. I mean, currencies move in long-term trends, and as you said, we're currently in a dollar strength phase and have been for a while. And what that does is it gives investors an opportunity to get invested into the currencies at cheaper prices than they would have, let's say, a year and a half ago, and take advantage of the value that's there. And, you know, the unique part of this CD is that you're guaranteed to not have a loss in it. So we guarantee you'll get your principal. If you put $1,500 into this CD, the worst you can do is get that $1,500 back at the end of the CD, no matter what happens to the currency market. So it's a risk-free way to invest into what can be some pretty volatile currency markets.
Yes, and the funding for this, folks, is now. You can do it right now, up to June 11th. Okay.
Right.
One of the phone numbers that you can call to get some explanation here is 855-750-4051. But Chris and I, we're going to break this down for you right now. So it's so cool. As we're talking, Chris, on Tiger TV, I got the currency breakdown. So talk to me about how these currencies work, because this is really cool how this is. Each currency, folks, is broken down to 16.7 of the CD, I guess.
Yeah, it's 1/6 of the CD. So it's Brazil, China, Indian rupee, Indonesian rupiah, Mexican peso, and Turkish lira. So there's 6 different currencies evenly weighted.
Yes.
And what's going to happen is over the life of this CD, which is it's a 5-year term, over the life of this CD, we're going to take the average performance of each of these 6 different currencies and then average those together, and we're going to pay the holders whatever the average upside is in these 6 different currencies. And one unique part of this structure that we've come up with is that if the average performance of these currencies is above 0, so if they have a positive return but less than 10%,
yes,
we're going to go ahead and pay the investor 10%. So we're going to pay in principal plus 10% if the average is somewhere in between 0 and 10. If it's over 10, we're going to pay over 10. So it's called a jump note. So if there's any bit of a positive return on this, we're going to just go ahead and pay 10%. And then if it goes over 10%, we're going to pay that additional also. So that is, one of the unique features of this. It is IRA eligible, as you suggested, FDIC insured against any bank failure, not against currency fluctuation, but it is insured against, you cannot lose money. So we're going to pay you back your principal no matter what.
Which is huge. It's so intriguing too, Chris, is that, and I've seen, and I'm sure folks you've seen EverBank ads. They have a lot of different departments, a lot of different ads, and when I look at the aspect of a CD market in general, and we talked about this last time, it's like when you can have something that you can actually get your money back, and that's why people get into CDs. There's no doubt about that. But then when I look at the aspect, like a 5-year CD, I don't know what that number is right now, but maybe is it what, 1%, 2%? Would that be?
A little less than 2, yeah.
A little less than 2. When I look at an aspect a little less than 2, and then I say, okay, well, hold it. I can give up the aspect of making a little less than 2, and maybe get more than that, but at least get my money back. That's a creative, safe investment.
We just had a market safe mature on Monday. In fact, we paid them out yesterday. So we just had a market safe mature that was put on 5 years ago. It was diversified metals, so it was a different structure.
Yes.
But it was based on the value of metals over the time period. And those investors got an excellent return. In fact, they got a little over 21% return on their original investments. Plus, the metals had actually, it was an averaging, so the metals had actually fallen back below the price that they originally invested in. So, that's not saying that the future economies is going to give the same performance, but I just use that as an example of averaging worked for those clients.
Sure.
And the averaging that we do, these emerging currencies are very volatile and can swing wildly among the days, and it's kind of it can be a nail biter if you own the individual currencies outright, because one day you're up big, the next day you're down big. By putting them all into one CD and by putting that into a principal protected CD, I think it's a great way for investors to get exposure to emerging market currencies without risk.
And you know what's cool is that you're speaking to a lot of equity investors out there also. And when I was just looking at this and you were doing the breakdown, I'm saying to myself, this is really neat, because what you also have is that there's plenty of folks that probably own equities that are Chinese equities. There's definitely folks that own Brazilian equities because of the fact, it's a big commodity market. Sure. You know what I'm saying? And there's plenty of Indian equities out there. I'm not sure, and that's a nice way also of taking a portfolio and having a true diversified portfolio that you're saying, okay, I think that, maybe these could go up, but you have no downside and you've got all upside. And if you own some of those other equities, that's a great way of leveraging, basically getting that, not necessarily totally delta neutral, but, you're basically neutralizing the positions out.
Right. And on this one in particular, again, the jump note, which is kind of unique,
that's huge.
And that if there's any sort of a return, you're going to basically, jump to that 10% over 5 years, which will basically give you what you would have gotten on a U.S. dollar CD. So if there's any positive return on these averages, then you jump basically to what you would have earned on a 5-year CD anyway. But again, with the potential of having a much greater return if the emerging markets currencies do well.
Sure. And folks, it's the initial is $1,500 to open, but that doesn't mean you can put in 50,000, 100,000,
Yep.
right? I mean, there's not a maximum. Okay, it's 1,500 is the minimum. Your principal is 100% protected. Your upside, it would be 10% minimum if it goes over that number. It's FDIC insured. It's also IRA eligible. Come over to our website at TFNN. You're going to see the EverBank banner. You can hit that banner. If you happen to be on the road, just remember, folks, everbank.com/TFNN. The phone number is 855-750-4051. Chris, thank you so much. We really appreciate it. And I love, I got to tell you something, man. I love how creative EverBank is, period. I mean, you guys are on the cutting edge, man. It's a good scene.
We try to be. We were built as an online bank, which was, out of the gates put us kind of on the forefront of technology and on unique products, and we continue to try to expand on that and stay in front of the markets as far as introducing new products.
That's awesome. Well, listen, you have a great one, safe one. Look forward to speaking to you again, Chris.
Thanks, Tom.
Thanks. Have a great one. You stay right there, folks. We're coming right back. This is Tom O'Brien. This is TFNN. It's everbank.com/TFNN. Be right back, folks.